My best guess is they're finally waking up to the shortage that we've all been talking about forever. They're willing to pay $1.50 more an ounce to get it now than to get a contract saying that they will get it a month from now.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for October 13th through October 20th, 2025, while supplies last. First this week, 100-ounce silver Engelhard bars are just $2.70 over spot per ounce. Next, backdated 1-ounce gold Britannia are only $75 over spot. Finally, BU pre-33 $20 gold St. Gaudens coins are just $85 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Steve Barton from In It to Win It. Steve, thank you so much for joining us today.
Thank you for having me, Elijah. I love these discussions.
Well, it's great to have you. I wanted to have you on, especially because we're seeing a crazy market in both gold and silver, especially in silver with the backwardation we're seeing, and obviously it making new all-time highs and breaking through that $50 level. And it seems like every time we get a pullback, it's just right back up there, including today when we saw silver drop like $2 or $3, and now it's rallying back again. But I guess, if you wanted to start the discussion on gold, because it seems like gold has led the way for quite a while here, and now silver's playing catch up. So what do you see happening in gold as we're piercing through that $4,100 level?
Yeah, really exciting times, especially today. I'm going to share my screen here, and we'll go right to the gold chart. And like you said, breaking through the $4,100 level. Now, just real quick, everyone catch up on the same page. This is a cup and handle pattern in technical analysis, which is a really bullish continuation pattern. So there's the cup, and here's the handle, and then here is the breakout, right? And the way you can measure upside targets on this, which is what I love about technical analysis, because it's not really worth a whole lot until you know like where your target is, right? So we can measure from the bottom of the cup to the top right side, the handle of the cup, and then measure the breakout to get an idea. And there's a couple ways to measure these cup and handle patterns. One is the value target. So essentially, it went up about $1,000 there. And so we can extend it up about 1,000, and we can see that the target was around 3,100, which we've already exceeded. So that's the value target. Now, the next target is the logarithmic target. And for that, you take the bottom of the cup to the top right side of the cup, but you do a percentage move. So here we take from the bottom to the top, and we can see it's about 100% move. And so we'll take the breakout and measure it up and go up 100%, right? And so we take there from the breakout of the handle and measure it up. And we can see that today we have hit the logarithmic target breakout of just above 4,100, which is kind of cool that you invited me on the show on the day that it happened, right? Now, I don't know if you follow Jordan over at the Daily Gold, but he's done some work on these cup and handle technical patterns and found that when you get the value target hit, it's about 12 months later that the logarithmic target is hit on these cup and handle patterns. So it's kind of neat that we hit that today. Now, where do we go from here? Okay, we just hit both of those targets. We've got a parabolic move here on gold. How do we know where the next levels are? What I like to do is I like to take a tool, what's called Fibonacci extension, and you basically take a low, a high, a low, and then it gives you projections out into the future of some likely targets, right? It's pretty easy to know when you're looking back in the past, you can see where past price action is, but when you're forecasting into the future, it's never been done before. So it becomes a little bit more difficult in technical analysis. And this is one way that you could do it. So I'll take the last 25 years worth of price action on gold, and I'll go back to the turn of the century, around 2000, and take that low of about $250, and I'll run it up here to the high of August of 2011, and then back down to the low right here of November 2015, and extend it over, and it gives us these pretty cool Fibonacci levels, right, and percentages. And we can see, if we zoom in here, Let me expand this up a little bit. We can see these different levels, right? This one right here is the 38.2, and then you got the 50% retracement, then you got the 61.8. And I don't think it's a coincidence that on these levels, we tend to get some price action, right? This is one of the things that's really cool about technical analysis is you can find patterns like this. You know, humans are predictable creatures and they follow predictable patterns. And I'm not the only technical analysis that has run, a technical analyst that has run this. You know, I think other guys are doing the same thing and they're choosing these levels to find buy and sell points, right? So it kind of becomes this self-fulfilling prophecy when we're all looking at the same charts, we're all pressing the buy and sell button around the same times, right? And so I don't think it's a coincidence that we hit a triple top right on that yellow line, the 61.8% retracement. And right here, you'll see we broke through, consolidated back down, and then boom, we're off to the races. And see, we got some more price action right around here, the 78.6. And then more right here on the 100% retracement move. You know, people are taking profits. Traders are like, okay, target achieved, right? Taking profits. And then we go up here to the next one. And if we zoom out, we can see that the next one was the $3,100 level, which lined up pretty good with the value target of the cup and handle pattern. Next one after that was 3,400. And I thought we were going to have a little more resistance on this one because this one is typically a pretty strong level, the 1,618 level. And we didn't. We just sliced through that like a hot knife through butter. So the next target that I see on this Fibonacci extension model is around 4,400. Now, we could certainly have a pullback here. I mean, we're extremely stretched on technicals as far as RSI and MACD and a lot of the other indicators and moving averages and things that I look at. But this would be the next Fibonacci extension target that I would look at. I would look at somewhere around 4,400. And then after that, you know, 5,400. And then we go beyond that and it gets up to 7,000, but we got to get there first. So the next target I'd look at is somewhere around 4,400 for a little bit of a hiccup if we continue this bull run in gold.
You mentioned how the RSI is getting stretched and other technical indicators. Do you anticipate those working this time? It seems like, you know, obviously we're going parabolic here and no one can really predict the future, but what is your take? Do you think we're getting overbought here? Or what do you think is going to happen next?
Well, when I look at these, so let me go to this, we'll go to the quarterly chart here on gold. And this is the RSI and this is the MACD. And we can see going back here to the early 70s when we got off the when we got off the gold standard and we all went to this fiat experiment, right? We could see that the technicals on the quarterly time frame, the last time they were this stretched was 2011, right? The RSI and the MACD. The MACD has never been this stretched before. Then I'll go here to the monthly. And on the monthly time frame, same kind of thing. We have a monthly RSI of 92. Look at the MACD. Look at how high this is. We've never been in this uncharted territory before. When I go here to the weekly, pretty stretched in the weekly, right? We haven't had blow-off tops like this. The last time we got in the MACD like this was back in 1980, right? When the Hunt brothers did their thing. So personally, well, let me just get out of the way. I'm not selling any bullion, gold or silver. I'm not getting rid of any of that. But what I am doing is I am trimming my speculative positions, right? I'm trimming my gold miners. I'm trimming my silver miners. I'm not selling all because I think we have a long way to go. But it wouldn't surprise me at all if we have some type of consolidation or pullback. Just because the next level on the Fibonacci extension is 4,400 doesn't mean that we're going to get there, you know? So I think now is a pretty good time to take some trimming positions here in things like GDX and GDXJ, right? Look at how stretched these are. Green arrows are entry, red arrows are take profits and trim. And I still have a position. I haven't sold it all, but you know, I think it's prudent to take a little money off the table. You know, in the miners. I'm not talking gold. I haven't sold any PHYS. This is essentially physical gold on the stock market, you know, through Sprott. I haven't sold any PSLV, right? Physical silver on the stock market. I look at this as kind of like a volatile cash position, like true money, you know, that I can get in and out of with a mouse click. So I haven't sold any of those, but some of the speculative positions, you know, like SILJ, right? These things are just completely parabolic, and it wouldn't surprise me at all if we had a pretty good pullback in some of the miners.
Certainly. And with respect to the price of gold, do you have any pullback targets that you'd be looking, if people are dollar cost averaging or they're looking to buy pullbacks, what are some of the levels there that you look at?
One level that I really hope gets hit is right around here, 3,500. Okay, so if I just put in a little line right there, that kind of gives you an idea. Somewhere around there. That is that lined up. See, what we had here was we had this rise up in gold. Everyone remembers when we hit 3,500, and that just kind of acted as like a ceiling, right? We just hit it several times, had a false breakout here, came down, and then finally blew through it. Now we are where we are now. That offers a really nice level of support for the price action to come down to. And one thing I like about this is every trader can see this, just like every trader could see the cup and handle in gold, right? And I think this offers a really nice technical entry. I think it would shake out a lot of the weak hands, maybe the Johnny-come-latelys that have just gotten into gold. They're buying up here at these levels, and if it got down to 3,500, I think we'd shake quite a few of them out, which would create some really nice opportunities for us and to make a re-entry point or double down. And also, this would time up quite well. This blue line right here is the 200-day moving average, which every trader looks at. Every trader has it on their screen, and every computer program has the 200-day moving average programmed into it. And I think if gold came back down here and touched on the 200-day moving average, which it usually does, in some time during a gold bull market, it will come back and retrace to the 200-day moving average, use that as a springboard to the next level. And so I think if I could write the story, I would write it so that gold retraced down here, back down to 3,500, coinciding with this level and coinciding with meeting the 200-day moving average or right around there. That would be how I would write the story. Is that actually going to happen? I don't know, but that's my first target right there is 3,500 for a pullback. You could have a little bit of pullbacks here. I mean, you do have some price action around those Fibonacci extension levels, like I said, so 3,750 could offer some support. And then there's also the psychological level. It doesn't line up with any Fibonacci extension work that I've done, but the psychological level around 4,000 is a bit of a support line right here. So I would say 4K, 3,750, and then 3,500 would be my immediate targets for a support zone.
Now, we've seen silver playing catch up, obviously, with silver above $50 at the moment. As I mentioned at the beginning, we saw a little bit of a pullback here today on October 14th, $2-3 down, but it rallied right back up there. Your take on silver right now, and especially with the backwardation, the severe backwardation we're seeing at the moment?
Yes, that's interesting. I've got some charts for that. First, let's go to the silver chart here. So first and foremost, we were right. We did it. I mean, us collectively, your channel, mine, all the viewers. This is real. This is happening. This is what we've all been betting on. It's nice to see. That like back here when we were talking about it, no one cared. It's like now it's finally making it. It's awesome to see this happening. So this white line right here is basically the psychological $50 level. And we've broken through that. Here's a little bit of an uptrend. We're looking at the futures price right now, so we'll go into spot and futures here in a moment. But this is basically what people are paying for silver a month from now, right? Okay, so we are just about ready, I think, to tap on this possible trend line right here. It takes 3 points to make a trend line. So this is a pretty loosely drawn white line here. We've got the height back here in 1980 and then the blow off top here in 2011. And we're coming up to it here again, which we may hit here shortly. So keep in mind you have that there. This is the same kind of work, the Fibonacci extension tool, and we can use this for silver. And so we're just taking around the same time, around the turn of the century, running it up to the 2011 height, and then down here to the cerveza sickness lows down here in February and March of 2020, which put it around $12. And then we can get these same targets here, right? So just like we did with gold, let me bring up the screen here. You can see that there are some hiccups around price action. I'll go to the weekly here so it emphasizes a little bit more. You can see that there are some hiccups around price action around those levels. So the 38.2 kind of acts as resistance here, support here. The 50% off offers resistance and now support. 61.8, same thing. Had a hiccup right there. There were a bunch of traders that were looking at this same level right here, and they took profits at that point. And now this next one up here, the 78.6, that one has been exceeded. That was around $47.50, $48, somewhere in there. So looking at the next targets, I'm going to shrink this down and move the screen up, and we can see that the next targets for Fibonacci extension would be around 57. After that, 69, 76, 85. I would look at this as a really strong level, and then this one up here at the 200% retracement would be just over $100. So those are the targets that I have. I don't know how likely it is that we're going to have a blow off top here all the way to them, but it is good to see now that we've exceeded that $50 psychological level. That can now kind of be acted as a level of support. So I was talking with Steve Penny about this on my show last week, and we're trying to come up with probabilities, and we both agree that there's probably three likely scenarios of what's going to happen here. And the first scenario is we get up here to around 50. We both agreed it was probably somewhere around $48 to $53 is kind of like the ceiling. And then we have a sharp pullback, right? And we have a sharp pullback maybe somewhere in the mid to low 40s. I would look at the floor on silver now as 35. So I don't think we'll ever see $35 silver again. Maybe I'm wrong. We'll see. Time will tell. So that's scenario one, where we have a sharp spike up, kind of like we did over here, and then a consolidation down. Scenario number two is we do something kind of like what gold did back in 2013? So right here, Craig Hemke talked about this recently. And if you go back here to 2013, I'm sorry, 2023.
Yeah.
Yeah, thank you. 2023. You see how we had the spike up and we broke this horizontal line of support right here. And then we had a failed breakout and we consolidated down. And what this is in technical analysis is this is basically like a bull flag, right? So if I zoom in right here and kind of open this up, you can see that it's a pattern where it creates like this kind of flag pattern and sideways, and that's a bullish pattern that breaks out. So I could see silver having a very similar pattern here where we are today. I could see it doing something very similar and creating a similar kind of pattern where we have like that spike up, and then we basically have bullish consolidation sideways here, forming another bull flag before we break out to the next level up. So that's scenario number two. And scenario number three is the one that everyone's probably thinking of, and that is just a complete blow off top where this is it, and it rockets up. You know, we're into the 60s before we know it, and then the 70s. And, if I had to put a percentage on each one of those, I would say it used to be last week, I was thinking it was about 50% that we were going to have a sharp correction here around this level. I think that the odds of that have gotten lower because it hasn't happened yet. We've just kind of been hanging around here. So I think the most likely scenario here is we form out kind of a bull flag pattern. I would put that at maybe a 50% scenario. Half the time here we do bullish consolidation, which I would welcome, because what will probably happen is people start selling their miners and we can get more of them, right? We can double down. And then maybe 30% that we have a sharp pullback, and maybe 20% of the time here, this is the blow off top that everyone's been betting on.
Now, with respect to the backwardation, what is that signaling about silver at the moment?
Okay, this is really interesting because this doesn't happen often, right? So I was thinking about this and I had an epiphany with the missus over the weekend while we're sitting down for dinner. And I was like, I know how to chart this, right? And so basically what contango and backwardation. So contango means that the futures price, what you would pay a month or 2 months or 3 months or whatever in the future for silver, is more expensive than the spot price, right? So, and then backwardation would mean that it's more expensive to pay for silver now than it is for, a month in the future. And if you think about it, it should pretty much always be in contango, right? Because, there's cost of carry. This stuff is heavy, and you have to pay for storage, and you got to pay for insurance, and you got to pay to make sure that nobody steals it, right? So the futures price should be more expensive than the spot price today. Well, that's not what we have right now. Right now, we have the futures price is showing on the screen right now at $50.46, and the spot price is showing at $51.90. Okay? So that to me fundamentally says that there is a stress in the market. People are afraid that they're not going to get it in the future, so they're willing to pay more for it now. And you got to remember that people are paying for storage and cost of carry and everything I just mentioned in the futures price, so this is really significant. So here's how we can chart it, is basically what we do is we take the future silver price minus the spot price. And if I back this up here, I'm going to go to the monthly now, and we can see this chart. Okay, so this white line is the zero line. That is saying that the spot price and the futures price are exactly the same. Okay, if we're up above here, that means that we're in contango, basically meaning that, you know, the futures price is more expensive than the spot price, which is where it should be most of the time. And if we go down below here, then we're in backwardation. Well, we can see if we chart this, that the last time we've been at this extreme of backwardation, like we were this week and last, was back here in 1980, right? When the Hunt brothers were trying to corner the market. So I don't know really what this means, other than I think we're at a pretty pivotal moment here, and we can see that there's increased volatility, increased uncertainty, and just a very exciting time if you're a silver investor.
You know, before the interview, we were discussing how this chart looks if you overlay the silver price, and I thought that was quite interesting. How it seems like during spikes in the silver price, we often see backwardation.
Yeah. So let me bring in this chart. Boom. Okay. So there is the price of silver. And we can see when we get some backwardation on here. Let me get on with the logarithmic beat. No, that just makes it more confusing. Okay. So we can see, look at these price spikes down here, or these spreads. I should call them spreads. These spread spikes down here when we go into backwardation in 1980, and we have a blow off top here in silver. And we got another one here in 2011. We have a blow off top in silver. And we've got another one right now, and we're getting a blow off top in silver. So pretty cool in that, when these spreads start to unwind, that you get some pretty volatile price movement one way or the other on the silver price. We could plot the same thing with gold, but they're both basically saying that there's stress in the market. Traders would rather pay more to get the silver in hand now than they would for a paper contract going into the future and hoping that they get it.
What I think is really interesting is, as you mentioned, people, it seems like there would be some doubt then that they would be able to get it if they get futures, like they wouldn't be able to take delivery, or what do you think the thinking is on that? And I mean, as you mentioned, people are willing to, pay the cost of carry right now to ensure that they get physical metal. It seems like there's sort of a breakdown between the physical and paper markets at the moment.
My best guess is that they're finally waking up to the shortage that has been, that we've all been talking about forever. And like you said, they're willing to pay up for it, and there it is right there, right on the screen. They're willing to pay $1.50 more an ounce to get it now than to get a contract saying that they will get it a month from now. I follow some guys that have been saying that the LBMA has been getting drained and shipped over. Carry traders are trying to make some money on this, and I think we're seeing that on the charts right now, and it's very exciting to be a silver investor right now. I think we need diamond hands. I think we need to hold. I don't think this is a sell. I think it's a good time to trim some of your speculative positions. Like if you, a lot of your followers, I'm sure, have some junior silver miners and junior gold miners, and probably very, very happy with their portfolios now. I don't think now is a bad time to trim some of those positions. And but as far as any bullion or physical positions, I unless it's an emergency or something, I wouldn't sell an ounce. I really wouldn't.
So does it not give you any concern seeing backwardation? Because I guess if we do look at the chart here, it seems to be, we see backwardation nearing the top, like in 1980 and in 2011. So do you think there's any significance in that regard?
I think so. I think that's and that's why a lot of my conviction, as far as like, maybe only 1 out of 5 times here, this is the blow off top. I think 8 out of 10 times here, we either have a pretty good correction, maybe back down into the low 40s, or we, what I'm hoping for, kind of iron out a bull flag here in silver before the next leg up. So that's kind of my base case. I think that we are near an interim peak, but I don't think we're anywhere near the end of the bull market at all. Like, I mean, when you look at just government debt and deficits, when you look at they're doing nothing to solve that problem. You know what I mean? Like in 2008, they made it abundantly clear that they're going to paper over everything until the system breaks and it just runs out. And then, all of us as preppers will have, been glad that we've been stacking. But, we could get a pretty good pullback here, but I think the bull market is on and it is nowhere near its completion.
Fantastic. Well, I guess before we let you go, Steve, if maybe we could touch on the platinum market, because it seems like that's also one that's been moving, not as dramatically or hasn't been in the mainstream as much as gold and silver, but your take on where we are in platinum at the moment.
Yeah. So right here, let me get rid of this one. Basically, that was where I swapped some palladium for platinum because I think platinum is going to do better. But basically, where we are here, this is a pretty cool setup here, I think, in platinum. So platinum was just boring all along right here. It was trading around $900, $1,000 an ounce. You were probably getting almost no orders, Elijah. And now we've had a breakout. So as far as technically, what we had here was we had a kind of I guess you'd call it like a triangle pattern. And it basically broke out of that triangle pattern. So we are now in a bull market for platinum, which is pretty exciting. I think that platinum has a ways to go, and I'm looking a lot less at price. I mean, as we sit today, we're around $1,700 an ounce, but I'm looking more at ratios here. So this is the ratio of platinum divided by gold, okay? And this is basically my my thesis and when I'm going to trim, and I'm not looking at price. I'm looking at ratios here, right? So right now it takes more than 2 ounces of platinum to get yourself 1 ounce of gold. Well, if you look over here, this is going back to the 80s. You can see the average is kind of, north of 1 to 1. So when we get here, when we get to 1 to 1, I'm going to trade half of my platinum position for physical gold, right? So I'll trade half of it. And 1 ounce of platinum will get me 1 ounce of gold. And then once we get up here to 1.5 times, right, I'll trade 1 ounce of platinum to get 1.5 ounces of gold, and that'll be a 30%. And then once we get up here to the top, if we get to another blow off top, I think I'll see it in my lifetime, at least I hope I do, then I will trade the remaining 20% of my position for gold, and 1 platinum coin will get me 2 gold coins. So that's basically my thought here for platinum. It's extremely rare. I've heard it anywhere from 25 to 50 times as rare as gold, but yet it's trading for less than half the price. So I think that problem resolves itself, and I think it reverses, and I'm literally betting on it. And I even did a silver for platinum swap. I swapped some of my silver for platinum. I did it right down here at the blue arrow, and so far that's looking to be a good decision. We'll see if that irons out or not, but I still think it's a fantastic time, if you want to swap some of your silver or gold for platinum, understanding that this is historically not money, other than I think sometime in the 1800s, the Russians used it as money. This is a very speculative bet, and it's a gamble, but it's a gamble that I think, if history repeats itself, will pay off quite well. And the way I'm doing is I'm doing a trade. I'm not looking at it in dollar amounts. I'm looking at it in ratios like this, and that's how I'm playing platinum.
Fantastic. Well, Steve, we really appreciate your time today, as always. If our viewers are interested in learning more, they can find our affiliate link in the description of this video. Any last thoughts before we let you go?
Well, thank you very much for having me on, Elijah. I love doing this. I do a show called Monday Market Moves every Sunday, and I go over the charts that you just saw and any gold, silver, platinum, a lot of commodities that we follow. And then I also interview a lot of guests throughout the week, guys like Rick Rule, Lobo Tigre, Adrian Day. And I love doing it. I've got a technical analysis series. For anything else that you want to check out, you can go to stevebartonmoney.com.
Fantastic. Steve, thank you so much for your time today, and God bless.
You too, Elijah. Thank you.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for October 13th through October 20th, 2025, while supplies last. First this week, 100-ounce silver Engelhard bars are just $2.70 over spot per ounce. Next, backdated 1-ounce gold Britannia are only $75 over spot. Finally, BU pre-33 $20 gold St. Gaudens coins are just $85 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.